Yeah, I'm not in. I'm not in, by the way. I'm not doing it. It's too late. You're in. All right, we've got two special guests here tonight. One recently just got out of Twitter jail. It's recovering. And another one, Josh Cherniak. What are we looking at this week, boys?
I would say like the biggest danger you're walking into is like don't think that something has to happen in markets. That's where a lot of my biggest career holes have come from. And people that were trying to bounce SIVB thinking that, okay, this thing dropped X% to a price where they believe that it had to bounce, and then you get T1 halted, and it's an example of your bias getting in the way of any type of rational thinking whatsoever, and as a result of that you get caught in a halt, and you don't really have an idea of where your risk was. You just thought that it had to bounce, so it's not really a trade at all. It's just something that you thought had to happen in a market. So you don't really have a trade on at all, and then you end up in a terrible position, which I've done in my career, thinking that something has to happen, and I have a bias on it, and then a position quickly on it, and the market proves me wrong, and I end up in a frozen spot. And obviously, the results of that are giving back a week's, months, a year's worth of gains, and you don't even know. There's nothing to learn from the error besides that you had a bias into the trade. There's no big lesson besides don't be an idiot. So you just don't want to ever find yourself in that position. Signing off.
Cheers. Boom. At least one of us took it seriously. But that's it. Outlier risk. Outlier range equals outlier risk. Anything to add? Cheers.
No, I'll wait
Cheers.
for Monday morning action. Cheers.
What's happening, guys? We got another Sunday scan coming at you, this time for the 13th of March and the week ahead. It is from Vail, Colorado. It's going to be short and sweet, I promise, because I am up against the clock. I have dinner tonight, so I wanted to squeak this in. Fantastic wedding. We had a lot of fun. I got to see a lot of trading buddies, and what's really, really unique about this particular wedding is, this is somebody that actually started in the IU community, and the entire table, we all met, at IU. So it was really, really neat to kind of see this whole thing come, full circle, and pretty rewarding at the same time. So, like I said on Twitter, for those of you guys that follow, I posted some photos from skiing today. I've never skied out west, so this was a first for me, and it was a cool experience. I've never booked a trip out here, and fortunately this wedding was here, and if I'm going to come here, there's no chance I'm not going to ski. So that was really unique, really breathtaking views. We got snow yesterday, we got snow this morning, we got snow while I was skiing, and then it just cleared out, and it was just full sun. So it was beautiful. But let's go back to last week. So SVRI, this is actually, you can go back another week. SI, and I always talk about this headline risk, right? And sometimes when you're trading these names long, for example, I traded SI bounce intraday long, but I had reminded folks like, hey, this has headline risk. So, where you may normally be confident in trade X size, maybe it's not worth trading what you're comfortable trading on this, because there is that outlier move that's happening, and there's that outlier risk, and that's why it has such range. And so that's what I call headline risk. You're one headline away from either, going to the moon or going to zero, right? And so SIVB was no different. It's always easy to say I told you so after the fact, and I'm not saying that here, but what I am saying is when there is that headline risk, there is a lot of times where maybe we warn and we're too cautious, too safe, and nothing happens. But there's that one time that it does happen, which is why you always need to be aware of headline risk. And it sucks. I'm sure a lot of people traded the bounce. It could have happened the day before, right? So you can go back and you traded it off 105 and traded it up to 120 and you got away with it. But then the next day, it's yes, I saw the same soak at 35 that a lot of people saw. And there's an interest level there. However, my next question is it worth the risk? And this is broken at this point. And any time that you're trading a stock that is broken, I mean, your risk is super, super high. Yeah, the halt risk, super, super high. And, it's again, after the fact, it's easy to say it, but there's plenty of times that we warn and nothing ever happens. But it is good to know what are the types that could halt. What are the types that could go to zero? What are the types that do have that outlier headline risk? And when you know that that is a factor, if you're going to trade it, you have to almost trade it like an option, right? So sometimes you trade those, the ones that expire same day or you're trading it Thursday, Friday. You know how fast those can plummet. And so are you putting in this high confidence aggressive amount of money into it, or are you looking for that outlier potential move? Maybe there's a 500 or 1,000% move on that option, but what are you willing to lose on that? And you kind of have to play it in that scenario in order to trade those properly. So are you willing to risk 5,000 and it goes to zero for the potential to make 50 or 100,000? Then yeah, then your risk is in check. But if you're going to be taking SVRI or any of these other ones that do have that outlier potential risk, headline risk, and you've got 50,000, 100,000, 500,000, whatever into the trade. And yeah, I know you're risking $2 a share, $5 a share, whatever in your mind, but you haven't really thought about the fact that there's this outlier risk that there's a real problem here. And the stock could go to zero, could go bankrupt, could just never bounce. But there's that desire to nail the bounce that drives people in. So unfortunately, I'm sure a lot of people got stuck in it. Hopefully not too bad. But it is one of those situations where it's not an A+ setup. It's not something that has a high degree of probability or edge. And unfortunately, as you saw, it's an outlier situation. So again, I hope that nobody ended up on the wrong side. I'm sure some did, but the signs were there. And if you're going to be trading it, you gotta trade it as an option. Be comfortable that you will lose 100% of what you're trading in the particular trade. So anyway, let's move on. For the week ahead, it's going to be a lot of banks. And again, I think you have to keep that sort of outlier risk in back of your mind. For me, I think sticking with some of these bigger banks, the non-regional, maybe more than the national ones, while they're getting smoked with fear, I think there's going to be great opportunities. And for me personally, that doesn't mean that there is not risk there. It doesn't mean that one of them can't do what the others did. But for me personally, I want to focus on the more national, kind of brands and banks anyway. And that's where my head's going to be at. So anyway, as always, and I'm going to get right into it because, like I said, I'm up against the clock, and I think I've got about 10 minutes left. As always, I'm not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're not okay with that, shut it off. If you're good with that and you want to learn what may make a good setup, what is proper edge, high probability, or just maybe adding things to your radar to watch for the week ahead, then you're in the right spot. And that's exactly what we're trying to do here. So for me personally, and again, I'm not going to go through them on my computer. I'll put up a chart for you guys to see. But as far as going through with the mouse and stuff like that, I'm not in the right, I don't have the right setup going on today. So that said, Bank of America, and beautiful unwind off the open. And look, I've been trying to check that box in my 2022 and 2023 goals of, kind of when I am off desk, when I am on, vacation or whatever, to actually really take the time off. And I did a good job in St. Thomas, and I did a good job this week so far. And then I did have an opportunity, though, on Friday. And Laura was doing something else, and I just came and sat down, and I saw that UVXY trade set up. And so for me, I did have a little bit of FOMO, and every time I fly, as you guys know, the market tanks. And that's just a high probability trade. And we should always just buy puts whenever I'm traveling. We know that. And by the way, that's not a buy or sell recommendation. That's a joke. But most of the time, a high percentage of the time that I do leave the desk, and actually am in a plane, the market typically tanks, and there is stats to back that up. But that said, UVXY trade fell right into my lap. That was good because I was prepared. I sized in, got the trade off, and all the FOMO that I did have. And truly, I've been so much better. I don't mind not showing up. I don't mind not trading. I'm not like I was in years past where you feel like you got to be in. But it was nice to get that because I just felt like there was just so much that happened last week. But I convinced myself that maybe I was going to trade SVBI. Maybe I would have ended up in a bad spot. One of the other banks. Maybe I would have got squeezed. Who knows? And that's what I told myself anyway. So anyway, Bank of America. That's going to be a top watch. Schwab, SCHW will be a top watch. And those are probably going to be my main focus. There are a couple other banks that I put on scan. And those ones were, you've got FRC, you've got PACW. PACW is going to be another one, as well as WAL. So for me, I always want to focus on the higher liquidity, but I'm a little nervous to trade these things long, the regionals. So again, I think I'm going to probably stay towards the national style banks, just because I feel like the outlier potential headline risk is just so much less than the regional. And I just don't want to end up in a situation where, I can look back and I knew the risk was there, and I shouldn't have done it, but I did it anyway. And then I ended up in a bad spot. So we'll see. But if banks do have some huge rally, then PACW and WAL and I always forget the symbol, FRC, I will look to potentially fade those. But again, it's always easy to go back and look and say shoulda, coulda, woulda. But if somebody swooped in and saved, if they got the funding they needed, all that kind of stuff, then we wouldn't be having this conversation. They would have rocketed back. You would have got squeezed. So don't beat yourself up looking back saying shoulda, coulda, woulda, because we can't live that way. So anyway, BAC, SCHW, probably going to be my main watches. Ideally, some major gap down and then potential reversal. Otherwise, looking for the gap up, maybe a push 9:45, 10 a.m. plus, and then start to sort of fade off from there. Next up, just nothing I'm crazy excited about, but it's kind of going back to the well on some of these other names that we're very familiar with. AI did the exact Twilio and DraftKings unwind that we talked about. So you've got that earnings move. Same thing with CRWD. Earnings move, gaps up. Everybody wants to fade it. It holds on another day. It holds on one more day and then just unwinds, right? And that's similar to what DraftKings did. They had the earnings day. Next day, gaps up, sits back. Third day, never looks back. And same deal with AI and a few of these other trades. So I'm going to be looking for AI, DraftKings, CVNA, all gap ups and potential failed follow throughs. So for me in this current market, it's hands off, 9:45, 10 a.m. plus, get a better feel for what's going on. I think that a lot of people try to figure things out right off the open. They put the blinders on. I always compare it to the horses, New York City, right at Central Park. And, they can't see anything except what's right in front of them. So if you make a move at 9:31, who knows? You might be trying to figure that trade out until 4 p.m. I want to be hands off and wait for the trades to come into my wheelhouse. That's what's been working in this market. And that's a big change from, what I've always done in the past. Other than that, Bird, beautiful unwind. At this point, it's probably just going to be a great ball of fire and just continue to unwind back under $1. So for me, I'd be watching any morning shoves, 130, 140, potentially taper off. It reminds me of that tattooed TTCF, if you guys remember. So, any good push, just be cautious getting too aggressive, but let it prove. So look for a swipe, sit back, swipe, failed follow through. That's what I'm interested in. Then DraftKings TOST, toast, I guess. I missed this particular unwind. I've been interested in it since they had their earnings and since it unwound, but I'd be watching all pops versus the 9:45, 10 a.m. kind of time frame. And then next up under continuation section, we've got UNCY. That's been there for a little while. The volume's good, and it's just one of those where you've got to see the wicks, and you got to respect the move. And so we had the first day up, big gap up. Next day ramps up, sits back, and then the most important part on day 3, it dips and rips back up, right? And so at that point, now every wick that gets soaked creates, in my opinion, longevity, right? If it's just going straight up, it's going to come crashing down at some point. But when there's those wicks, it promotes longevity in the particular moves. And so this one has that. So I'd be watching, and as long as it's over 250, I would assume that shorts are still on the wrong side. Shorts are still probably too aggressive, and we can continue to break out higher. The other one that came on radar was CING. This one had the huge volume day that we do look for, 40 million shares almost back in late February, and now we're retesting back towards that high. So at this point, if it starts to base over those maybe 180s, 190s, and starts to base, I'd be looking to use basically the support 175 level. I'd be looking for dips versus the 175 level for the potential of the 2 breakout and continuation. And it's almost sort of like that daily trap, liquidity trap type trade that we talk about. So keep an eye on that one, and we'll watch for that to break out. Last 2 was BLPH. BLPH, I think a lot of people were expecting a really bad raise with terrible warrants, and instead they did the registered direct offering. And at the end of the day, it was a lot less. It was a baby shell for it's a small company anyway, but it just wasn't a lot of stock compared to some of the volume that they've had, right? So I think that shorts were just on the wrong side, maybe anticipating terrible pricing, a ton of warrants, and then they're like, oh, well, now what? And they got into a bad spot. And again, when the crowd focuses on whatever the highest gainers are, and this thing absorbs and absorbs, it starts to turn into like a perpetual squeezer. So meaning there's covers that are coming in, but new shorts are letting them out, right? Covers are coming in, new shorts are letting them out. And so it's just kicking that eventual full squeeze down the road until a later date. So that's, in my opinion, where we're at with this. And I think it's good to keep it on radar. Not necessarily interested in the short yet, but once everybody forgets about it, then I'll be interested. It's sort of like AMAM. I would compare it to that trade. And we did have that blowout move, and then there was edge. And then last but not least, ONCS. ONCS had the 60 million, 40 million. So basically 100 million shares traded between 2 and 275, almost 3. Came back down, consolidated, and now at this point, 250s is the top. But if 250 starts to base and confirm and soak, then we have a potential breakout towards 3 setting up here. So I definitely watch that in case it checks the boxes for a secondary squeeze. So that is about it. Again, for me in this market, it's not about just coming to market and just reacting right out of the gate. And I would say 4 out of 5 days, maybe the last 2 weeks, I've been really hands off. And you should be able to tell right away. Is there an A+ setup off the open? And you can answer that yourself. And if the answer is no, and you're still pushing buttons off the open and trying to figure it out and being aggressive and stuff, then that's a problem. And I used to do that a lot. And, especially Monday morning, you're ready to go. You've been, it's the weekend and you're ready. You come back, you're excited. You see something moving and you go for it and you end up in a bad spot. So again, 4 out of 5 days, the last 2 weeks, I've been very much hands off, getting a bigger picture move, 9:45, 10 a.m. plus, and it's been super, super helpful because it's kept me out of some of the other stuff that maybe would pull my attention away from the layups. And that's what we want. We don't want to be trying to get a home run off any pitch. We want to wait for that meatball, a nice loft pitch to smash it out of the park. So that's really the goal there with this current market environment. That's not to say we wake up, maybe we wake up on Monday and there's huge move and we can react out of the open. That's fine. Those ones I will adapt to and we'll make that plan at 8:50 a.m. every single morning. However, if it's not, your best friend is hands off. Just wait. Just be patient because otherwise you'll end up in a bad spot like we talked about. So anyway, that's it. And again, I'm flying back tomorrow night. I'll be ready back all week. No days off for the next long while, actually. So all my traveling has finally come to a head. And that's that. So have a good rest of the weekend, guys, and we'll see you in the room tomorrow.